Hi, everyone. Thank you so much for joining us today. I'm Marina Hatsopoulos, and this event today is brought to you by the Hellenic Innovation Network with the support of MIT Enterprise Forum Greece and the Greek Consulate of Boston. We're going to hear today about the acquisition of Helic by Ansys, and this is significant for several reasons. First, it's a great example of commercialization of university research by students of NTUA. Second, it's an example of a global company building a research center in Greece and leveraging the local talent. And finally, it's one more reason for Greeks who left during the crisis to return to Greece, because it's not just a single job opportunity, but an entire startup ecosystem that is beginning to flourish in Greece. So when we use the term exit, we're not talking about the team cashing out and drinking champagne on a boat in the South Aegean. While the technology is absorbed into the United States. What we mean by exit is a liquidity event for the founding team, which was likely compensated below market potential over an extended period of time. So this is the reward for the risk that they took. And exit is not the end of the road for an emerging business, but it's really just a major milestone in the long road of its growth. Ansys is not just investing in Helic, it's investing in Greece as a country and creating new jobs there. I'm really excited about today's event. I'd like to introduce to you the Consul General of Greece in Boston, Stratos Efthimiou. Thank you, Stratos.
Thank you, Marina, and a big welcome to all the panelists from the Consulate General of Greece in Boston, an office that champions science diplomacy. It is not by accident that the Hellenic Innovation Network began here in Boston. Boston, such as Silicon Valley in California, is a world-class research and innovation center. Here you can see and feel the constant flow between the research and business ecosystems, the easiness with which one research idea can be translated into business innovation, and the way intellectual property and patent rights are protected and commercialized. It does stress the importance of technology transfer offices and how the innovation environment attracts global companies, such as the success story of Helic, which attracted Ansys to Greece, something for which we are so excited. There are positive steps and initiatives that the Greek government has been taking in this field as we try to create the conditions for more spin-offs, startups, and better osmosis between research and industry. These steps are crucial for our future, which will be determined by our ability to innovate, to be iconoclastic, and espouse new ideas. A big thank you to all, and I would like to ask Vassilis Papakonstantinou.
Good evening, everybody. Thank you for joining. On behalf of MIT Enterprise Forum Greece, I would like to welcome you also to this webcast from the Hellenic Innovation Network series. MIT Enterprise Forum was started a few years ago, back in 2013, with the vision to make Greece a tech hub by 2021. 2021 is around the corner. Greece is close to be a tech hub, not it's closer, much closer than we were expecting to be back when we started discussing about this idea. And if you are interested to see more great startups, or if you want to become a great startup, you can join our upcoming startup competition that the applications are available until the end of the year. You can find all these information at mitfgreece.org. Today, I would like to welcome Dora Varvarigou, professor at the NTUA, a very good friend. She's also the chairwoman of the Greek Water Company. Dora is a professor at the School of Electrical and Computer Science, Electrical Engineering and Computer Science here at NTUA, and she has degrees from NTUA and Stanford. Dora, the floor is yours.
Good evening, ladies and gentlemen. Thank you, Vassilis, Marina, and Stratos, and the Hellenic Innovation Network for inviting me to the discussion of this success story of this acquisition of Helic. Helic, a Greek DNA startup that focuses on electronic design automation, by Ansys, which is a world leader in finite element analysis, computational fluid dynamics, electronics, semiconductors, embedded software, and design optimization. This is indeed a very early and a very successful story of commercialization of NTUA research by students, which lead to creation of research centers of a global company in Greece. And this is really unique and very important. Today, we have the main actors of this acquisition. We have Mr. Vic Kulkarni and Mr. Yorgos Koutsoyannopoulos. Mr. Vic Kulkarni is the Vice President and Chief Strategist at Ansys Electronics and Semiconductor Business Unit in San Jose. And among other things, he drives the strategic customer executive relationships and of course, mergers and acquisitions with the other Ansys leaders. So prior to merging with Ansys, Vic was the co-founder and president and CEO of Sequence Design, which focused on EDA solutions for power and energy efficient chip designs. He has held engineering and senior management positions in a number of leading companies in the Silicon Valley over several years. And he has degrees from the University of Cincinnati and the Indian Institute of Technology, IIT, in Bombay. And of course, our own Yorgos Koutsoyannopoulos, who is now the Vice President of R&D at Ansys. He's based in San Jose, California. Yorgos is in charge of Ansys Global Semiconductor Electromagnetic Solutions and developed by a world-class group of scientists in Athens. Prior to Ansys, and since 2000, Yorgos led as the CEO of Helic. Helic was a pioneer high-tech startup, the first to raise venture capital in Greece, and was the success story that's been acquired by Ansys in January 2019. Yorgos is an undergraduate student from the National Technical University of Athens, but also has attended the executive courses in Harvard and London Business School in leadership and marketing. So welcome, Vic, welcome, Yorgos. I think I would like to start with Vic. I know that he has prepared a small presentation on giving us some background on Ansys and how Ansys strategically decided to end up acquiring Helic and getting into doing business and R&D center in Greece. Vic, if we can get your slides up and we can see you as well.
Okay, so good morning, Kalimera, Kalispera, for people who are joining us today. Thank you for inviting us. So I'll just share a few slides to give some background and some of the context in terms of today's discussion. So let's go right into it. Just to give you an idea of who Ansys is. Ansys has been around for almost 50 years. This is our 50th year, in fact, anniversary. And we have over 45,000 customers. The software is used to predict how product design will behave in real world environment. The products are unified on a simulation platform capable of complex multi-physics workflows and solutions. So to give you an idea of the market opportunity, just to set today's discussion, our CEO and our strategic team did quite a bit of research in terms of understanding the total available market, the TAM, for simulation, which is our fundamental business. Because this for multi-physics simulation covers fluid dynamics, mechanical, reliability simulation, light ray tracing for LiDAR, for autonomous cars, thermal, electromagnetics, and so on, for semiconductor chip and electronic system design. And the worldwide customers are indeed in all kinds of verticals, from autonomous to oil and gas field exploration. Some of the folks are using us in the COVID-19 challenges and fight for UV light simulation to disinfect the aeroplanes and the trains and so on. That's the newest application we saw. And 5G, HPC, electrification, and aero defense. Aero defense is huge, as you know, around the world, in Europe as well as in US. There's a lot of investment going on in terms of aero defense. So what we did was to understand the market. The total market cap of Ansys is about $28 billion. So we're trying to see, we are about $1.5 billion announced recognized revenue, which is part of the analyst reports. So we said, okay, let's look at the simulation market opportunity. And within the next few years, our team came out with, the corporate team came out with almost 3x in terms of the size of this market. And it's very important to understand the M&A strategy in the context of this particular market size. How do we look at our foundation technology, which is growing around 8%? But then there are emerging high growth solutions. And this data came from about 80 plus customer interviews, market research, as well as our own contacts and customer management meetings, technical review meetings, and their needs over the next few years. And the new adjacencies form the foundation of today's discussion. Is about 32% is the forecast which we see, which is at the 8-year CAGR between now and 2026. So that's $2.7 to $5.5 billion. So the M&A strategy involves the classic 4 components on the X and Y axis. This is the Deloitte analysis image. So one looks at search for cutting edge applications, expanding the industry supply chain on the lower right, or acquire advanced technologies if we don't have those components to make sense in the various M&A strategy discussions, and strengthen our market position to expand that market share in the market opportunity, which I just shared with you. To that end, just to give you an idea of Ansys, over the years, when I joined Ansys, it was through acquisition of a company called Apache Design. And prior to Apache, I was CEO of Sequence, as Dora mentioned. And just when we were about to go IPO on Apache, Ansys acquired us. And that was very important.
Sorry for interrupting.
The power and thermal issues of chips and semiconductor and electronic systems. And over the years, we continue to acquire. Today, you'll hear more about Helic from Yorgo and all of us. But Granta, material, so-called material library, and how to analyze materials, optical simulation, and very recently we acquired a company called Lumerical, which is shown in the bottom there. That's the latest acquisition.
Vic, sorry for interrupting. Your slides are not advancing.
AGI for aerospace and defense. So you can see that adjacencies and emerging high growth solutions are part of that equation in terms of finding, make sure the fit is correct. So this is important to know. Now, when we looked at Helic, and we'll go into a little bit more discussion about that today, is you look at the bird's eye view, look at the H index chart. So what's the motivation for investing in Greece, and why Helic? Helic, of course, has been very innovative startup, and we'll talk a little bit more today. But if you look at the worldwide map of around the world, especially the European map of H index, which is versus GDP per capita, Greece is very in an attractive position of lower GDP per capita, at the same time, high H index, which are the number of paper submissions and the index of the innovation, and it gives you a feel for the talent which exists in each country. And it's coming very close to number of, you can see on the chart, number of advanced countries in that world. So in this one, you can, as I was just mentioning earlier, the total addressable market is growing dramatically from 2018 to 2026 at 3x. And this is the data which I was talking about in terms of the compounded annual growth rate of 32%. And the new adjacencies are important in terms of how we look at acquisitions beyond our foundation technologies. So this research was very critical in terms of understanding our market sizing, who do we go after, and so on. So the strategy is in the M&A driven in terms of in the electronics and semiconductor company. So as I was mentioning that this is a jigsaw puzzle of searching for cutting edge applications, expanding industry supply chain, and then acquiring advanced technology to strengthen market position and expanding the market share.
Yeah, Vic,
So that
your slides are not
very careful
advancing still.
in terms of selecting the targets, in terms of which companies to acquire, and then we'll go into more details of criteria for acquisitions. But Granta, for example, is based in Cambridge. It's a materials simulation. It has
Vic,
100,000.
Vic, you need to advance the slide.
I'm sorry, can you see any?
There you go.
Okay, maybe on a full screen, it is not showing. Can you see now? It's okay.
We don't see your presentation. We see your slide deck. So probably you're looking at the other screen. You share the other.
So in terms of the most important elements, in terms of leading to acquisition, are really it's both things. It's art as well as discipline. Art in that one has to find gems, hidden gems, and discipline in terms of following the strategic plan, which I was mentioning earlier. So in this context, I want to emphasize the importance of networking. So for folks who are on this call, networking is so critical. For example, in this case, Yorgo and the team, we know for many years through our ecosystem of industry design automation conference, various technical conferences. And we knew at that time, I knew personally that Helic would be a gem someday. And there is an inflection point where electromagnetic simulation becomes important for 5G, extremely high-speed chip design, advanced mobile, complex AI chips, autonomous, and so on. Then on the discipline side, there are three important areas which we have to touch upon. So there's market attractiveness. What are the adjacencies of our current product and go-to-market strategy? What's the market sizing, total versus addressable market? What are the growth vectors? Is market saturated for Helic application, for example, or is it going to be must-have? Is this a small fish in a big pond or a big fish in a small pond? Then the second component of these important element, as Dora wanted to know more about, is company and product attractiveness. What does that mean? Is Helic a market leader in electromagnetics? Is it a competitive landscape? Are we just looking for the same piece of the growth, or is it expanding market? Is 1 + 1 greater than 2, or is it greater than 3? How do customers respect the technology for Helic and the team and the products? Do they trust them? Can customers depend on their products? So we have to do that kind of due diligence in private as well as officially in terms of under non-disclosure agreements. What is the IP portfolio of Helic? Is there a growth in terms of papers, key innovations, who's inventing, how many patents they filed? And I think, as I was going to say earlier, there are about 15 patents already granted. And beyond patents what is the go-to-market strategy? Is that going to be pre-acquisition or is it post-acquisition? As a small company, let's say Helic has certain way of addressing customers. How will that get absorbed into our sales channel, into our support channel? So we study that. So that's the so-called company and product attractiveness. Then finally comes the rubber hits the road right at financial modeling and attractiveness of financial model. So once the market, company, product attractiveness has been met, those criteria have been met, we then looked at financial attractiveness of Helic with respect to our corporate finance, revenue recognition, legal agreements, whatever they have in place, are they all in line with what Ansys was looking for? Organic and then synergy for revenue growth model. Can our current sales team support that? Can they sell the product as a part of adjacency, which is very important, which I was mentioning earlier, for growth? It's not just adding something for revenue, but rather for growth. So adjacency of our products with respect to customers' needs and how do they fit. Then what's the operating model and income statement? At the end of the day, the operating model and growth and margin has to be there. The acquiree or the target company, we always look for, does it meet our Ansys model, which is highly profitable. It's over 40% in terms of operating margin. It's a very, very high bar to meet. And that's what we look for. And then very important is, of course, the underlying theme is the culture itself. With all the due diligence, how do people respect the knowledge sharing? Is there knowledge sharing within the team? Is there any so-called what I call one for all for one kind of culture in the company? So those are the kinds of things which we do in terms of final, cultural issue for acquisition. So I hope that addresses some of the questions you had.
Yeah. That was very deep and enlightening and in detail, Vic. Thank you so much. Now I want to turn to Yorgos for a while and see the other side. When Yorgos, you were going through this, multi-dimensional analysis. You were head of the CEO of Helic. But even if you go a little bit, few years back, when you finished your PhD at NTUA and then you started Helic, what were the first steps? What is a small outline of your path from a PhD to NTUA to a Helic that's now being through scrutinization in order to be acquired with Helic? What is the path that brings you to this stage where you can you have commanded attention and now you were given a chance?
So thank you, Dora, for your question. If I go back to 2000, which was roughly the time that we started the company, I would say that I was a very typical engineering postgrad student in the sense that I had zero business expertise. I hadn't worked for a company like Ansys, so I hadn't gone through the corporate schools of technology that some people do here in the Bay Area. So I had very limited exposure on what business smells and feels like. And I was, for years in the lab. I spent several years looking through a microscope, looking at chips as part of my PhD. So it was that starting point that, I was no exception, let's say, from any other engineering postgrad student anywhere else that would start a company. The context that was even more challenging was the fact that I was in Athens. And for those that are old enough to remember, back in 2000, Athens was not the, let's say, the place that you would easily start a company, not to mention a tech company, that would look for private equity investment. So with that in mind, we decided to take that seed that we had from our research days in NTUA and try to build a business plan that honestly we didn't really follow right after our first investment. So we built a business plan. The idea was to try and commercialize something that we had learned in the lab. We decided from the very beginning to address the global market. We tried to see, what would be the opportunity line ahead and take some of our learnings from school and see, how we could create chip designs or software. And this is how it all started. In the beginning, we tried, to reach out to people in the finance community of Athens. Personally, I had no connections. So I would just ask friends and they would ask their friends. And at some point, I ended up speaking to pretty much all the known funds that were domiciled in Greece. And I got a sense of what is that fundraising act and how I should prepare the business plan and the startup to become attractive. So I learned all those the hard way. And to be honest with you, between the beginning of the company and maybe 7, 8 years after that, there was no known mistake that I hadn't done as a CEO. There's a figure well known here in the Bay Area, Guy Kawasaki. He was Mr. Garage.com back in 2000 when the .com bubble burst. And he was teaching through his experience, what are the known recipes for startups. So I bought his book sometime, I believe in 2006, 2007. It's kind of a recipe book. It has, every page has some recipe. The art of hiring, the art of marketing, the art of sales, the art of developing your product, your plan. There was no page that I hadn't done wrong in my beginning with Helic. And it was interesting because the truth is this, there is no school for these things. You know, there's no way you can attend, let's say, Harvard Business School, and once you are out of it, you know how to start a company. There's no such thing. So the reality is that it wasn't easy to begin, mostly because we were located in Greece and the ecosystem was not friendly. But then being persistent and being ambitious enough and understanding from the beginning that we have to address the global market, that thing helped us, and step by step, we went through the childhood phases of a startup, and eventually we were able to stand on our feet sometime 3-4 years after we started. And when I say able to stand on our feet, I mean we were cash flow positive and we started becoming profitable. And that 4 or 5 year period was not easy. It was very painful. And if I want to split the phases of the lifetime of the company, I would say that between 2000 and 2004, we spent our initial capital to, first of all, create an identity, understand who we want to be, win the first couple of customers, mostly with services and initial prototypes of software. Later on, we went through the second phase of our company. We raised the second and the third financing round. And in 2008, we moved the headquarters of the company in the Bay Area. So now we had 2 bases, one in the US, one in Greece. Later on, we had more bases in Japan, in Yokohama, in Ireland. And we started, branching out to various places, mostly for growing our business and also for building our R&D team. The latest phase started after 2012, 2013, when we practically pushed the reset button in our technology. We developed something substantially bigger, which is what attracted Ansys later on. We became an important part of the ecosystem by being a regular piece of the design flow for major chip companies. And when I say major chip companies, we managed to win as customers more than 13 out of the 20 biggest global semiconductor players. So they were using our software as part of their design flow. And that was the latest phase of the company, when we saw a constant, healthy growth, both in our revenue and in our profits. And as Vic pointed out, that was very important for Ansys when they looked at Helic. We were healthy on the technology side, on the business side, and on the financials. You alluded to that, Dora, a little bit in the last part of your question. To prepare a company to make it attractive as first of all, as a supplier for customers, but mostly as a potential acquisition target, it takes a lot of discipline. And we figured that out, I would say, in the last phase of the lifetime of the company. We managed to become disciplined enough, not only to build our business, but also to make the company financially attractive. And when Ansys met us for the first time, this was probably the first point that Vic made when we met, that you guys, you're not only successful because your customers say so, but when we look inside, we see something that is healthy and well built. And to be financially attractive, it takes a lot of discipline.
Yeah, of course. But we heard about the beginning of the Petrina Chronia, the difficult years. And people want to know about it. There's Zoe that comes up with a question here, says that, you survived for 8 years without profit. I mean, did you receive grants? And at the end of the night, we know what you did wrong. What is the best thing that you've done? What is this pivotal moment when things, the decision that you make, that was the decision that made things work?
Okay, let me start by the question from Zoe about surviving the first years. Helic had the luxury to raise equity financing in 2000. We had a very diverse and interesting group of investors from Greece, the UK, and Cyprus, and we raised our first financing round. That helped us, I would say, run for maybe a year and a half. And sometime in 2003, we had also some revenue that helped us fuel our development. In 2003, we had a second smaller financing round, which also helped us get through another year. And then from 2004 and onwards, we became cash flow positive. So Zoe, it wasn't 8 years, it was 4 years that were not easy. But by 2004, mid of 2004, we were able to sustain ourselves without the need of additional capital or debt. And regarding grants, Helic has been very privileged and honored. We have received significant grants from the Greek state and the European Commission. There were plenty of initiatives in the beginning of 2000, but also there were important initiatives sometime in 2010. And this is when the semiconductor cluster was formed and Helic was part of it. So there were grants flowing into the ecosystem, and we were among those that received those grants as well. So that has been extremely important and very helpful during rough times.
Okay.
Now, to the second part of your question, Dora, things that are key milestones or inflection points. One of the things that startups don't really do is to be very honest with themselves. You know, your product, your technology is your baby. So it's always beautiful. It's always, you know, your thing. So you don't really admit whether the product or the technology is powerful enough to compete globally. So one of the inflection points was, you know, when we had substantial feedback from customers to understand where we should head eventually. And this is when we pressed the reset button for quite a few times. This is called pivoting, and we did that. We did that several times. So I remember 3 or 4 major milestones where we actually changed course based on customer feedback. And this was eventually, you know, the point where we were able to absorb, change, and bring to market something that would be more attractive at the end, and customers would be willing to pay more for it. And we had several of those inflection points.
Yeah. Oh no, this is great. But I want to go, if I may, back to Vic. And, you know, Helic is essentially a software company. You could have just take Helic and run, move Helic in California, in the US, you know, located in many locations around the world. But you chose to retain Helic's presence in Greece, okay? And I don't know, you had this very interesting slide in your presentation that showed mean income, average income versus age index for different countries. So maybe this, I don't know whether we're able to now to share that, Vic, and maybe you want to give us some insight how you decided to stay with Helic in Greece and even see more Helics maybe coming forward later on. We cannot hear you because you are in mute.
Yeah, thanks, Dora. If you folks don't mind, let me give one more try for sharing that slide, which she was mentioning, and also address the questions she just asked. So hopefully you folks can see this. I won't go into the full screen mode. I think that was probably causing the issue. Can you folks see this?
We see the first slide now.
Right.
Second now. Okay, third. Okay.
Can you see now?
Yes, yes, we can see the presentation.
Okay, okay. All right. So just to check and the presentation, and then let me now go to the question which you asked. So this is an important area of, if you look at innovation as well as the H index, which I was mentioning earlier. So what Dora is referring to now is why Greece as center of excellence in Europe. I think it's an important part of it. Kind of reminds me of the back end, as you folks have been tracking emerging high-tech companies in India, Israel, some of the North Carolina, in our own USA, and so on. So then let's look at the momentum of Greece in terms of center of excellence, and that will address some of the issues in terms of what led us to the decision in terms of why should we just continue to invest in Greece in terms of what you were asking, and why not move things to US and so on. It's very important that firstly, there is tremendous, in terms of total number of folks, and the GDP is in the area of manageable $30,000 to $45,000 US dollars equivalent and so on. But that alone is not good enough. For example, innovation is critical. So you're talking about 4,200 graduates per year, which is relevant to Ansys. You also see some of the blend of emerging companies, which were very interesting. As Greece is coming out of the recession, they have done Greece as a nation has done an incredible job. We need to keep that momentum on. With 100 VCs funding startups in past 2 years, as also Yorgos was mentioning, 10 Greek software companies are with 200 plus headcount and so on. And Athens the median is about 38K with, and other parts of Greece about 10% lower than this. And more importantly, the state R&D incentives are there also. So if you put these into perspective, instead of moving, and what happens is if you just make cost as a criteria, or the per capita in GDP, etc. So the median base is not good enough as just a one criteria, because we are not outsourcing, we are innovating. Gone are the days of, when people move, the emerging nations have moved from just manufacturing or doing IT job or maintenance, remote support job, etc. The innovation was very important for our decision. So by continuing to do that, just on a personal note, I can say, I established COEs, or Center of Excellence as I call. That's an important mindset in terms of how you treat and you manage the worldwide R&D, worldwide support, worldwide to meet worldwide customer needs. So I established COEs in Sophia Antipolis, for example, in France, Shanghai, Boston. We acquired a small company there in the Boston region when I founded Sequence, and that was in the Acton, just north of Boston. Then Noida, Bangalore, and so on, and have had great success. So it's important that we continue to grow some key centers of innovations, key centers of excellence to address what you are asking, Dora. And so 4,200 graduates, of course, is important, but I would say the PPP is important, which is Purchasing Power Parity Index is critical, which is relevant to the local economies, local talent, and how that comes into play. And we have to be competitive with the local standards of living. So yeah, hopefully that answers that question.
No, it's very important, very enlightening. These questions in the audience that say that, startups don't often survive for 20 years, as Helic did. We have a friend here says, and this is a problem, you need to survive for 20 years to be acquired by Ansys, and this is a tough road uphill. What is the advice now for startups? Is it early discipline? What is the advice to a startup that needs to survive for 20 years to be given the opportunity to find its way to the Silicon Valley?
So Dora, the term startup usually applies on companies that are early in their lifetime. So I would say startups are called companies up to maybe 7 years of age or 8 years of age maximum. This is the time when people raise more capital to fuel growth before they become either cash flow positive or eventually profitable. After that, the company graduates and moves into, let's say, a growth pattern and becomes, a company that is financially viable. And this is what happened to Helic as well. So we, after year, I would say year 8 or year 9, we graduated from the startup phase and we went through all the childhood illnesses, and eventually, we started riding a growth pattern. A company cannot survive on debt and private and equity investment for longer than, I would say, 5 to 7 years. And during those years, it's important to show to investors that there is a growth pattern, there is a healthy business model, there is a market, there is a growing market, and the company can really, seize the opportunity and actually grow in a healthy way. So you have to put that in perspective. And again, the liquidation event, or the exit as we call it, happens once the buyers see, as I said, a healthy model, healthy business model, a healthy growth pattern, and financials that are sound and solid. And this is, regardless of the size. It can be a small company, it can be $1 billion company, it can be of any size. There is always a buyer for every target and vice versa.
Yeah. Well, now I have a question for both of you. Like, this is now the new ecosystem in Greece, and this is changing, right? And now, Yorgos, you lived through all the phases of this change, but also Vic is, Vic, you look like you're very well connected to the academic community, and that you value the local human capital and the research. So how do you view the new ecosystem in Greece in terms of entrepreneurship? And especially to Vic, whether you have any specific plans to intensify your presence in Greece and to invest more into the local human capital and research. Maybe we can start with Yorgos.
Yes, Dora, the ecosystem has evolved substantially recently. As I said, back in 2000, we were probably 3 or 4 companies in tech. And recently, I think we counted more than 400 startups, the majority of which are in the tech sector. And I would say the majority of them developing software, which is very important. So the trajectory is such that shows that we have a healthy, growing ecosystem of startups. The mentality has changed. Maybe the crisis was the inflection point in 2013, 2014, for younger people to realize that this is a viable career and a career journey that is attractive and makes sense. And also the infusion of capital. There is significant private and state capital that has been flowing into the ecosystem recently, and of course in the next 3 to 4 years, that transforms substantially what's happening in Greece. And I think this is what is visible right now outside Greece, especially here in the Bay Area. We keep hearing all this good news, and particularly Ansys has been attracted by that as well. So it's a combination of transforming mentality, talent, and the beauty of our country. So it's this unique combination that makes Greece a very attractive place to make an investment.
Well, yeah. Vic, do you agree with Yorgos? I mean, you didn't mention the natural beauty of Greece as one of the reasons that made you acquire Helic at the end of the day. But now, do you see this change in the Greek ecosystem? And what are your thoughts about possible plans that you may have into going forward with more interest into the Greek startup ecosystem?
I think yeah, that's an excellent question in terms of how do we now expand the footprint. And the foundation of that, I find, is just because of the experience we have had around the world in terms of creating these centers of excellence and growing them and so on, is university relationship, and having key professors is going to be super important. So when I look at, let's say, NDUA, where you are from, Aristotle University or University of Patras or Technical University of Crete, those are when to expand a particular region, for example. I think it's very important for us to together, and of course Yorgo and the team have been already discussing few ideas, but creating tabs or technical advisory boards, kind of looking at some of the foundational things which we have done in India, in the US. For example, personally, I've established incubation center in University of Cincinnati. That includes simulation of fluid dynamics, then also additive manufacturing, mechanical simulation. And that created, and thanks to Ansys and the investments they made, the previous CEO, Jim Cashman, he is also from Cincinnati, a graduate, and I am from there too. So we had that bond. And we together, we did that very huge multi-million-dollar innovation center of all the places in Cincinnati, not in Silicon Valley, not in Pittsburgh, which we already have Carnegie Mellon. But those kinds of things created so many PhDs, so much interest. And the professors started to communicate with us, with our R&D. And we started to get stream of people also, and nurturing those relationships created. For example, we hired folks from 2 PhDs from Illinois Institute of Technology in Chicago. Then we hired folks from Cincinnati over time. Within Ansys, there are several graduates. Kobe University is another good one, but right now I'm driving with our key initiative of hardware security, for example. That's a very complex area where quite a few PhDs are required, and I'm driving that with our other colleagues within BU, including Yorgo and our chief technologists and so on. And it has become such an important pillar of our growth in Japan, then in National Taiwan University. That's another area where we are doing AI and machine learning. So I think that's the foundation, important foundation, which we have to grow in Greece. So with the work which Yorgo and the foundation they have created, plus the ecosystem which is slowly emerging, but I think that's the important part of starting right at the university tab, and to summarize, and having some of the key students visit us. You know, in terms of like Cincinnati, there is a program of internship, which we have. So, or University of Austin, there are a few interns who are actually cranking out new code with our R&D guys. I think that's the way to go in terms of human capital, which you asked about, and the research. I think this is where we believe that we don't have to bring anything back to US, rather grow these centers of excellence with the dedicated, say force we have already. Yorgos team is just so solid. They already innovated post-acquisition. They innovated a workflow and new technology which combines the Helic conventional or classical products with our electronic business unit product called HFSS, which is the industry standard for electromagnetics, which when the designers are going off chip, for example. And that is now 50x improvement or even better. I'm sure Yorgo has the latest information on that one. But this is the moment of pride for us. So it's not just one event, but it's a continuous journey.
This is great. Thank you, Vic. I think I'm going to take a question from our audience. Maxims asks, Yorgos, can you comment on your strategy to survive the competition from small companies, but also from big ones?
Thank you, Dora, and thank you, Maxim. This is a very good question. for the large players in the ecosystem, the thing that the startup does is to, first of all, find markets that are underserved or underaddressed by the major players, and markets that are growing fast, so that for a startup and its investors, it starts making sense as a business opportunity. The areas that we picked back in the early stages were areas that were definitely underserved or not served at all by the 4 companies, but they, as market segments, exhibited some substantial growth. And we took some bets pretty early on. It's true that, you know, we pursued the business in areas that were very new back in the early 2000s. For example, we were speaking about the design of multi-band transceivers for cell phones. And if you remember, back in the early 2000s, that didn't exist. Now, today, in the 5G era, we see, you know, 20 radios on a die, on a silicon die. So Helic early on saw the opportunity that was definitely underserved or not served at all. And this is where we placed our bets. And eventually the market grew and picked up quickly, and we were ready to address it, and we became a sizable entity. Now, with smaller companies, there is a different challenge there. This is what I said earlier about being honest with yourself. You have to look at the other startups that are eyeing the same market segment as you are. You have to be honest with your R&D team, and you have to clearly measure yourself against the others. So what we did was to try to gauge very carefully how we performed with our field team in customers against competition. And we did that on a regular basis. We didn't always win. We learned, we went back to the whiteboard, we improved, but the goal was very simple: to be best. And if you miss that, if you don't tell yourself that you have to be the best, it won't happen. So that was, let's say, the honesty that we tried to keep with our R&D team, to always aim high and eventually become best. The players around you change. They move as well. You know, you move, but everybody else moves. So you have to keep a constant eye and watch out for the moves of the competitors, and that helps a lot absorb that feedback and eventually move accordingly and pivot accordingly when that's necessary. The other thing that we did with all the big players, Cadence, Synopsys, and Mentor, and less with Ansys, we created alliances. So we looked at our customers, we looked at what is valuable to them, what is the design flow that we are serving, so how we can build interfaces with the major companies. And this is exactly what we did. We built valuable interfaces to Cadence, to Synopsys, to Mentor, and eventually we were seen by these companies as partners instead of competitors. And that's why we became also not only partners, but also acquisition targets. And the same way with Ansys, as Vic pointed out earlier, we were known in the ecosystem as good, reliable partners. And this was what Ansys valued as well. And that's a multiplier when you try to see what 1 + 1 = 2, this is the amplifying effect by becoming a partner, and let the relationship pan out, you know, let the parties know each other. And you transform a rather competitive situation to more of a partnership situation.
That was really enlightening, Yorgos. We are very close to the end of the session. I have a question, last question to Vic. I mean, Vic, you are a man of a great experience of acquisitions and startups all over the world and in different contexts and environments. What is a couple of important moves that the Greek government should make in order to attract more investments from companies like Ansys?
Yeah, I think that's really super critical now that the momentum continues. Just when Greece is coming out of the recession and the low economic times and really growing forward. So I can think of three important things in terms of what they can do. Recently, maybe a few months ago, I was in Switzerland, in Lausanne, and went to see a couple of customers and EPFL park. So what I believe is what Greek government can do, we are very excited about some of the progressive discussions we are having, and we see that in the news, is to build technology innovation center, R&D parks and infrastructure for incubating smaller and mid-sized startups that creates innovation, and which I saw that back when India was just coming out of similar recession or the lull in the early 2000. The second one in my mind is accessing collaborative labs, low rent spaces for technology companies, and then tax incentives to attract joint ventures by both local investors and international companies. So it's not just a freebie, but rather, the so-called well-defined growth and well-defined milestones, and that there is various rounds of investments which the government can provide. So nobody's taking a free ride. And then finally, special incentives for companies involved in digital technology to accelerate transition of Greece to the digital world.
That's very nice. That's very nice. I'm afraid we don't have more time. I would like to ask everybody to stay for our last video on our next event on the 14th of January, with the title, the discussion will be on Greek CV ecosystems. So before closing that, I want to thank Vic, I want to thank Yorgos and the Hellenic Innovation Network for organizing this wonderful discussion tonight. And please stay tuned for our next Greek VC ecosystem discussion on the 14th of January.
Thank you for having us.
Thank you, everybody. Vic,
It's been a pleasure.
Yorgos, thank you.
Thank you.